Welcome back to Caffeinated Money. We have an exciting topic for all you savvy investors out there. We're diving deep into the world of renewable energy and discussing why investing in Enbridge, ticker ENB. It might be a game changer for your portfolio. But before we get started, if you haven't already, don't forget to hit that subscribe button and the bell icon to stay updated with our latest investment insights. Now, let's jump right into it. The rise of renewable energy. Over the past few years, there has been a significant global shift towards renewable energy sources due to growing concerns about climate change and the need for sustainable energy solutions. Enbridge, a leading player in the renewable energy sector, has been at the forefront of this transition. Enbridge Incorporated is a multinational pipeline and energy company headquartered in Calgary, Alberta, Canada. Enbridge owns and operates pipelines throughout Canada and the United States, transporting crude oil, natural gas, and natural gas liquids. Enbridge's pipeline system is the longest in North America and the largest oil export pipeline network in the world. 2. Its crude oil system consists of 28,661 kilometers, 17,809 miles, of pipelines. Its 38,300-kilometer, 23,800-mile, natural gas pipeline system connects multiple Canadian provinces, several U.S. states, and the Gulf of Mexico. The company was formed by Imperial Oil in 1949 as the Interprovincial Pipeline Company Limited to transport Alberta oil to refineries. Over time, it has grown through acquisition of other existing pipeline companies and the expansion of their projects. Between 2012 and 2021, Enbridge transported over 32 billion barrels of crude oil. Enbridge has built several renewable energy projects in North America and Europe, including wind, solar, hydroelectric, and geothermal, and has proposed a net zero greenhouse gas emission target for 2050. Enbridge is ranked 144th on the 2022 Forbes Global 2000 and 418th on the 2022 Fortune Global 500 list. Market analysis. Now, let's delve into the market analysis of Enbridge. We'll explore its financial performance, stock trends, and growth projections. Remember, investing in any company requires a thorough understanding of its financial health. Enbridge Incorporated announced that its board of directors has declared a quarterly dividend of $0.8875 per common share, payable on September 1, 2023 to shareholders of record on August 15, 2023. The amount of the dividend is consistent with the June 1, 2023 dividend. The board also declared the following quarterly dividends for Enbridge Incorporated preferred shares. All dividends are payable on September 1, 2023 to shareholders of record on August 15, 2023. Sustainable business model. One of the key factors that make Enbridge an attractive investment opportunity is its sustainable business model. As governments and corporations worldwide are embracing green energy initiatives, Enbridge is poised to benefit from these shifting trends. Enbridge made its first investment into renewable energy in 2002 with the purchase of a wind farm. To date, Enbridge has invested in 23 wind farms, 7 solar energy projects, 5 waste heat recovery facilities, 1 geothermal project, 1 power transmission project, and 1 hydroelectric facility. Enbridge has a growing interest in European offshore wind energy, and its renewable assets are part of the company's plan to achieve net zero emissions by 2050. In 2020, President and CEO Al Monaco said that renewable power is now the fourth Enbridge platform. Competitive advantage. In this section, we'll examine Enbridge's competitive advantage in the renewable energy sector. We'll explore their cutting-edge technologies, strategic partnerships, and the barriers to entry for potential competitors. Enbridge has 2 technology plus innovation labs. In January 2019, the first lab opened in Calgary, Alberta. In April 2019, the second lab opened in Houston, Texas. The labs use industrial predictive algorithms, machine learning, and sentiment analysis to find efficiencies within the company and help improve safety and reliability of their pipeline infrastructure. The labs have developed ways to get sensor data from pipelines, helping to improve flows of natural gas and crude oil terminals. Additionally, the labs have helped enhance pipeline leak detection and ensure better maintenance schedules. For renewable energy projects, the labs have developed different ways to reposition wind turbine blades to help maximize wind power generation. Risk analysis. All investments come with some level of risk, and Enbridge is no exception. Let's look at the potential risks and challenges the company might face and how they plan to mitigate them. Less than a decade ago, Enbridge's business was heavily reliant on oil pipelines, which accounted for around 75% of its earnings before interest, taxes, depreciation, and amortization, EBITDA. The rest of the business was a mix of natural gas assets, 21% of EBITDA, and renewable power, 5%. This portfolio basically meant that Enbridge was heavily tied to one of the dirtiest carbon fuel options around and one that has come under increasing scrutiny from those with an ESG focus. In 2017, Enbridge bought Spectra Energy, materially altering its business mix. After the acquisition, oil dropped to just 49% of EBITDA, with natural gas increasing to 47% and renewables rounding things out to 100%. Natural gas burns more cleanly than oil and is expected to aid in the transition to clean energy. Enbridge's natural gas operations, meanwhile, are twofold. It owns natural gas pipelines and a natural gas utility, which actually means there's a bit more diversification than the overall number suggests. To be fair, the EBITDA mix moves around, and today, the breakdown is closer to 57% oil pipelines, 27% natural gas pipelines, 13% natural gas distribution, the utility operation, and 3% renewable power. However, the big takeaway is that Enbridge is trying to change along with the world around it, shifting toward cleaner energy alternatives. Dividends and shareholder value. Let's talk about dividends and how Enbridge rewards its shareholders. Understanding the company's dividend policy and its commitment to creating shareholder value is essential for long-term investors. The shifting focus here is highlighted by the company's capital spending plans. Natural gas pipelines are expected to provide annual capital investment opportunities of $2 billion, gas distribution of $1 billion, renewables of $1 billion, and oil pipelines of $1 billion. Essentially, oil pipelines are only expected to account for 20% of the company's capital spending, with natural gas-related operations at 60%. Clean energy only gets 20%, but it only makes up 3% of EBITDA, so that's actually a disproportionately large investment. If what you are looking for is an energy stock that's basically hedging its bets, then Enbridge is a solid option. Add in the generous 6.6% dividend yield, U.S. investors have to pay Canadian taxes on that, and the dollar value received will change along with exchange rates, and there's even more reason to like the company, at least for dividend investors. On that front, Enbridge has increased its dividend annually for an impressive 28 years and counting. The best part, however, is that virtually all of its business is backed by fees or long-term contracts, so volatile energy prices don't really have much of an impact on its ability to support the dividend. The company's distributable cash flow payout ratio is roughly in the middle of its 60% to 70% target range, as well. So there's ample room for adversity before a dividend cut would be a risk. On the leverage side of things, Enbridge's debt-to-EBITDA ratio is also roughly in the middle of management's target range. So the dividend seems fairly safe from a balance sheet perspective, too. If you are looking to add a dividend-paying energy investment to your portfolio, Enbridge should be on your shortlist. It is a reliable and high-yielding dividend payer with a business that's not reliant on volatile energy prices. And, as an added bonus, it is working to shift its business toward cleaner alternatives, reducing the risk that you end up buying a company that goes the wrong way of the increasingly green world. Community and social impact. Investing isn't just about financial returns, it's also about making a positive impact. Enbridge's efforts towards environmental sustainability and community welfare can influence your investment decision. In conclusion, as we near the end of this video, remember, investing in any company requires thorough research and consideration of your financial goals. Your questions answered. Before we go, we'd love to hear your thoughts and answer any questions you might have about Enbridge or investing in renewable energy. Drop your comments below, and we'll get back to you. That wraps up our in-depth analysis of Enbridge and the exciting opportunities it presents in the renewable energy sector. If you enjoyed this video and found it informative, give it a thumbs up and share it with your fellow investors. Thanks for watching, and we'll see you in the next video. Happy investing!